weekend, all. Ira Epstein of Linn & Associates with your SPDR ETF weekly edition, and this is for Friday, the 10th of December, 2021. So on the weekly, we're just going to look at weekly charts. I made a change. I dropped this time PAVE, P-A-V-E, and the reason is the plan's already happened. The money's been made. Now it's got to be dispersed, and God knows when the government will start doing that. And I replaced it with KBE. One of you had written, and I like the idea of the bank index. It's based off, it's an ETF that tracks the KBW bank index. Not every bank, obviously, but some interesting ones in there. So I'll bring that in. If you have ideas, because as we get into the new year, it's time to make changes, write me. It's that simple. You can write me at iepstein@linnllc.com. You can also put up your comments on YouTube at any time. I read them all the time. All right, so where are we? Well, we had the CPI number come in even hotter than the market thought. Now, the question is, what does it mean? Well, the first thing it means is the runway is now open. You are cleared for takeoff, Fed. Yep. You can go on February, take the right runway, go up to 25, 30 billion a month, and take that off into the tapering. We'll see you in March as we decide once you're through with that flight and you land, do we start raising interest rates, or will inflation have pulled back a little bit, as so many analysts think, that the Fed gets reasons to consider? Should it pause a little bit? Does it have to move that fast? You have an interesting 90 days ahead of you. That's how I'm looking at it. And barring that, the only hiccups in the market seem to be COVID and what it brings. Everything else so far, going into year end, do I see Santa? I do, and that's what I'm expecting to occur. When you look at the tech sector, up and away you go. I mean, how do you argue on a weekly basis that pattern? You know, you've now got, you take this off, by the way, you now have higher lows, higher highs. You'll see that on the next charts that I've got for you here. Here you go. So where's the next target in the market? Probably the upper Bollinger Band, and you keep fighting there. You can see it. Do you generally stay over the band very long? No. 5% of the time. So even on a weekly chart, that's an important number. What the market is saying, though, is if you can get this to embed. What does embedding mean? It means that the red and the blue lines give you at least 3 weeks in a row where both are over an 80 level, and that locks in a trend just the way you did here, and that's often accompanied by the market moving to higher prices until you get the crossover where the red line's back under the 80 level. So right now, momentum is up, the trend is up, and you're into a resistance zone. KBE, what we just talked about, downtrend. Lower highs, lower lows, countered because the market is trading over the 18-week average. Now, when you get a trend on a swing line, and that's what this line is that I've got right there, the swing line is formed by looking at the prior week, or if it's a daily chart, the prior day, or a 15-minute chart, the 15-minute period before you. Does the market make a higher high, a lower low, have an inside period, or does it have an outside period down or an outside period up, outside day down, but whatever the period is you're looking at. In this case, when you close over that, you still have the momentum up, so it counters. It's a filter of the swing line, and while the swing line called for a break, which it got, and it got it when you lost the embedded reading that we just talked about, I'm now looking for that. What number? The 18-week average of closes. The market goes there, and there's your battleground. So now momentum is pointing down to get bearish. Yeah, bearish, even with higher interest rates potentially coming. You got to get a settlement under that 18-week average. In the industrial sector, here's what you're basically doing. You're going in big sweeping moves to lower bands, upper bands, making attacks in lower bands, back and forth. You're just doing one of these. Sort of COVID related more than anything else. In the energy sector, the market's come down, and I was reading an interesting report this afternoon about the shale sector in the United States and how smart the developers have gotten. They don't just go all out any longer and say, go to a bank, I'm just going to borrow, the price is just going to keep going up. They've been burned too often with that. Even the small ones, they keep their balance sheets good enough and lean enough for them where they can withstand the setbacks. But that doesn't mean we're not going higher. Do I think you're going to expand the U.S. shale? No, not under this administration. This administration is anti-developing U.S. on its own for oil. That's not Republican or Democrat. That's the administration. Don't give me that it's a Democratic one. It's the administration. They are going green. It's the argument isn't should we go green. We all know we should. That's a given. It's the pace that you go green. It should have begun a long time ago. It didn't. Do you do it all at one time? That's the big question. I saw New York today. They are now telling new buildings that are going up, you cannot hook into the natural gas lines. You've got to go electric. It's part of the greening of the world. As that occurs, how do you make where are you going to get the energy for the electricity? Well, it's coal. It can be a diesel. It can be natural gas. I mean, there's many different ways to do it, but that's going on. What about atomic energy? You know, nobody wants to talk about that dirty word. Still a pretty good way to go. SPY, higher high, lower low, just fighting a battle here. But what's the market saying? It is saying continually, I don't want to stay under that 18-week average of closes. It's a dance that it does. And each time it does, it rallies up to a new high against the upper Bollinger Band. After the euphoria comes out, you get another correction after a few weeks. You tell me that hasn't been the pattern? That has been the pattern. On the emerging markets, you have lower low, higher high. Now, the daily charts are out of the downtrend. Is that a bounce or something bigger? The weekly chart is not saying it's something bigger yet. In order for that to occur, I think this particular chart has to get up and over this number, which is 52.14. So on the way up, though, at 51.01, on a weekly chart, are the bears waiting for the market? Probably. You just hit the lower Bollinger Band the past 3 weeks. I think the bears were covering shorts there. That's what I teach in the enhanced Bollinger Band course. Gold. I have been wrong in the gold. I did a gold report 3 weeks ago where I thought it would be better. I told traders to buy right here on a weekly basis. I stop here. You have not been stopped out, but I certainly haven't been getting any rewards on it, and I feel stupid in the sense that here you hear all this talk about inflation, and here's the inflation medal. It ain't going anywhere. And if you think Bitcoin's an inflation, crypto, it ain't going anywhere. It's been going down. You were 70,000. You're back into the 42 to 46,000, 48,000 range. Whoa, that's been a painful trade. GDX fought its battle at the 100-day average, couldn't get up at all, fell back down. Nothing to really do on that. ARK, I'm sure that Kathy Woods would love to forget this year. This has been a disaster for her. She started off the year on a high point in the 160 level. She's this week got as low as 89. The flows out of her funds are large. She's creating new funds, and she'll probably get a big following out of it. You know, this has got to be one of the first years, because I have followed her. I don't remember her having this bad of a year, okay? She's very, very popular. Her trading sometimes is ahead of itself in what she's picking, and it's got to get markets to come there to her, and it's been wrong this year. Anything anybody else wants to say, terrific, beat me up, but you go to 160 to 90 when everything else is going up and you're hitting highs, not very good. Amazon, higher lows, higher highs. Hard to want to be short this market during Christmas, don't you think? I don't want to be short. I think the pros are buying the market. I think they're looking to flip out at the upper Bollinger Band. And I think if you got under last week's low, you'd have to go back to the drawing board. Something's very wrong. Up until then, I think the pros are buying. Apple. Told you, I haven't seen an empty Apple store. Actually, they're giving out numbers, and you got to wait in one of those chairs like I do. You know, you sit in one of these orange crates or whatever. It's very elaborate. And you wait for one of your associates to come to you. These stores are humming. I can only be bullish. You know, if I look at things, there's a trick in life that I learned about investing, and I'll give it to you that you can tell your kids. What do they have in the house that they really buy? They go out to the store. Is it Dove soap? Is it Tide? What is it? If they have a TV set, that's the brand that they want. You invest in the things you keep buying, and when you notice you stop buying that bar of soap or whatever, why? What changed? I'm making it very simple, but that's how you look at things. And if you keep up with the things you like and you're not an oddball, and you might be, but you're not an oddball, that's a neat way to think about what do you want to own. Well, most people want an Apple phone. They're very expensive, as you know, but they're a hell of a phone, no question about it. I love mine, and I have one that's now 3 versions old. I'm waiting for the newest version, and yes, I will get the newest version when it comes out. But you can see how the market is there. And by the way, the newest version, you can't get the 13 right now, right? That's been a problem. Still bullish. TLT. Okay, you would think this market should be coming down. Interest rates are going to go up. No, still in an uptrend. Support back at 148. As the market came up to these numbers, we have been telling you right here, I have been telling you, no, if you look, you're coming up, you're overbought, you're not embedded. That's where the pros take their money off the table, and that's what I think right there. Tesla, he is still selling. Yep, I think it's 5 weeks in a row. Mr. Musk has been liquidating his stock. He said he would. Nothing wrong with the company. Momentum down. Could we be targeting the 900 area? Until it's over, it ain't over. There's a gap in the chart on the dailies at the 950 that begins there. Keep your eye on that. You're not that far away from it now. And that's it for the news, because that's next. Now, I want to remind you, it's Christmas. Buy yourself a gift. My Spider ETF video, what I want to be for you in the morning is you wake up and about 9:30, quarter to 10, you go to my video, Chicago time that is. I want that first half hour of trade or so to go by us. Then I start recording. Why? The algorithm money coming in, because they got to place whatever the futures did and catch up with that. And you get the series of government reports that end typically at 9 in the morning Central Time. Once they're out, I start covering all this for you. 40 charts at a time. Typical video in the neighborhood of 18 to 20 minutes. Specific, buy here, sell there. Here's the reason why. Here's the chart pattern behind it. So you're a chartist. You want to talk to another chartist, and it's not easy. I'm the guy. Can you write me and ask me questions if you're a paid subscriber? Yes, and I do respond to them. So I devote a certain amount of my time getting back to my paid subscribers. Sometimes I'll create a video for them so they can see just what it is and why I'm doing it. There'll be a 1-minute video or so, but I can cover everything you need. Go to our website. Under the word research, treat yourself to Christmas, and I'm Ira Epstein.